And given the metal's credibility as an excellent conductor of electricity, it is of immense value in an even more electrified world that will be underpinned by energy transition. Hi everyone, I'm Bhavya Laul, a principal analyst with Wood Mackenzie and focused on the copper markets. For today's presentation for the one-to-one global online tech metals event, I will be briefly discussing the short to medium term copper market outlook, followed by the red metals role in energy transition. Underpinned by long-term decarbonization objectives, copper demand will benefit from the shift to a more electrified world. However, the here and now is cast by uncertainty, so I will kickstart my presentation with that. So my presentation will be divided into two parts. The first will be around the market outlook. So beginning with copper demand side trends, the outlook for copper demand for the remainder of this year and going into next year remains uncertain given the current macroeconomic environment. Manufacturing activity is slowing down in several geographies, and input cost inflation is weighing down on the industrial production outlook. The chart on the left-hand side exhibits the relationship between industrial production and our refined copper consumption estimates, and you can see that these two variables are reasonably correlated. While 2021 was all about solid and sustained demand growth in the world ex-China, led by Europe and North America, the outlook for this year is one of moderation from the high base of last year, as well as amid a deteriorating macroeconomic environment. In light of these trends, we are currently forecasting a refined and total copper consumption growth rate of less than 1% for this year. And this is also partly driven by China and the on and off COVID-19 restrictions that have been weighing down on manufacturing activity, as well as the property sector has been witnessing a slowdown in China. However, there have been some other demand sectors, end-use demand sectors in China that have been demonstrating bright spots. There has been solid growth in renewable power installations, as an example. EV production has also been solid in the year so far. Grid investments were also 10.7% higher year on year in the first 8 months of 2022, which in turn supported wire rod production in the country. For next year, we're forecasting a 2.6% recovery in total copper consumption, which is partly guided by our macroeconomic view of soft landing for the economy in 2023 as of our third quarter 2022 macroeconomic estimates. But also there are several semis expansions and ramp ups in the offing, including copper foil mills that should underpin demand next year. There is essentially a downside risk to our 2023 estimates as current levels of high inflation and related interest rate hikes could dampen end consumer demand more than what we are currently anticipating. And this in turn could potentially offset some of that positive impact coming through from the upcoming semis expansion. And you can see from the right-hand side chart on the slide that historically periods of high inflation have often been followed by a downturn in cathode demand. And there is a downside risk that this trend may well as be replicated in the near term. Now, just wrapping up our near-term view using the chart on the left-hand side here. As you can see, recovery in 2021 was led by mature economies while China kept pace. However, the outlook for 2022 is being weighed down by these very mature economies, especially Europe, while emerging Asia, which didn't rebound as exceptionally last year, continues to recover this year and the next year. Now, with that, moving on to the trends over the next decade in terms of demand. In terms of regional growth, as you can see from the two charts on the right-hand side and the top chart on the right-hand side actually, that China will be a key copper consumer in the market over the next decade. And even with somewhat moderate levels of growth rates compared to historically, the country will still continue to support considerable volumes over the next 10 years. I will come back to the specific demand drivers for China in a little bit. But what we also foresee over the next decade is that emerging Asia will underpin demand notably with the growing size of the domestic end-use market and low cost of factors of production within this region that is attractive for semis investments. In India specifically, domestic semis production in the coming years could be well supported by the government duties on imported fabricated products such as copper tube and copper wire rod, as well as a push towards promoting domestic manufacturing. We can expect more copper tube manufacturing investments come through under the government's production-linked incentive scheme for white goods. ASEAN, on the other hand, is well positioned to reap gains from a relocation of supply chains. Vietnam is a pertinent example that witnessed end-use production and related semis production as well pick up in the recent years. What also bodes further well for this region as a whole is participation in multilateral trade agreements that will facilitate the movements of goods, both intermediate and final goods within the region. Now, coming back to China, if you look at the right-hand side bottom chart, in China, transportation and the electrical network sectors are expected to contribute to the most to Chinese copper demand. And that in turn will be underpinned by the uptake of renewable energy and EV policies that are geared to meeting the country's long-term decarbonization objectives. Just as an example, China will bring more wind and solar capacity online to fulfill its dual carbon targets, and total installed capacity of wind and solar is expected to reach 1,200 gigawatts by 2030. And as the penetration of renewable energy increases in the energy mix for China, grid network upgrades will also be essential to support this growing renewable power capacity, which will in turn boost demand for copper wire and cable and copper wire rod subsequently within the country. As you can see in the red bars, at the same time, demand from construction will be affected by the three red lines policy, as well as a slower birth rate. And with regards to the appliances sector, as the construction sector slows down and property completions are weaker, we will expect domestic demand to be softened, while export demand is forecast to soften as supply chain diversification leads to some of the offshoring or reshoring of manufacturing capacity to other countries within Asia, or as well potentially to back to their home countries in the West. Now, with that, I conclude my discussion on demand. Now, let's start a bit of a summary on the supply side. Firstly, in terms of the current market dynamics and the energy price pressures, the impact on copper supply overall has been much more muted compared to some of the other energy intensive commodities such as aluminium and zinc, which have had to curtail output against the backdrop of escalating energy prices. Secondly, as you can see from the left-hand side map here, uh, we are now entering a period of above average mine supply growth this year and over the next couple of years, which will be underpinned by output from some of the projects that are highlighted below this map. I won't go into the detail here, but essentially, this above average mine supply growth over the next 10 years is an outcome of projects that were sanctioned during the previous period of high prices, which is around 2017, 2018. But in the latter half of the decade, we still need projects to come on stream to meet the forecasted demand requirements. And indeed, beyond 2025, and against a backdrop of still steadily growing demand, the base case mine supply pace of growth starts to falter a bit due to trade decline and reserve depletion. Now, the risk is that in the current environment, which is one of rising inflation, slowing economic growth, and as well as considering the rising supply from the current wave of projects, which are due to come online, producers may take a step back from sanctioning new projects that are required to meet the supply gap that is set to emerge, that you can see on the chart on the right-hand side. And without additional mine production relative to what we assume to come on stream over and above what is available from our base case scenario, this theoretical supply gap would stand at around 6.5 million tons by 2032. What you can also see from this right-hand side chart in the shaded area is that there is a pipeline of possible projects, and if they come on stream, they could help fill this implied supply gap that I just talked about. However, given the current macroeconomic environment and political uncertainties, bringing those projects online will remain a challenge for the industry over the next few years. Now, quickly summarizing our price view and market view in light of the supply demand trends that are outlined so far. As you can see from the chart on the left here, for 2022, we are anticipating a market surplus reflecting a slower pace of refined demand growth relative to that of supply. Prices are expected to trend lower compared to the first half. And in the short term, they will continue to be affected by the market sentiment, movements in the US dollar, any changes to visible exchange stocks, as well as macroeconomic and industry specific developments that pan out through the remaining of the year. In light of the supply demand trends that I just mentioned about, we do foresee a decline in prices over the next couple of years. again against the backdrop of an above average supply growth, which will end up feeding into surpluses in the metal market. And we expect that the implied metal stock in days of consumption will rise during that period. And this period of oversupply is expected to persist until 2025. Now, from a fundamental perspective, we would expect prices to come under pressure then, and currently estimate that copper will reach to a low point in 2025 at an annual average of $7,164 per ton, reflecting a peak in stock days of consumption during that year. Post that, a slower pace of production growth will be set against a solid refined growth recovery, which will underpin a recovery in prices from 2026 onwards and continuing into the following years. Um, Over the long term in 2032, prices are set to reach our forecast of long-term price level of US $7,716 per ton in constant 2022 US dollars, which in our opinion should be sufficient to incentivize the additional mine supply required to close the gap that I ascribed to before and keep the market in balance. There are some key takeaways summarized on this slide, but in the interest of time, I won't go into each one of them in great detail. But I would like to highlight here that while new mining projects are required to fill out that theoretical 2032 supply gap, in reality, some of this could also be met by an increased use of scrap, both at the smelter and or the refining stage. Also, if that adequate mine supply does not come through to balance the market and market prices end up trending higher, uh, we could also see the market being balanced via demand destruction through factors such as substitution and thrifting of copper use in end applications. In reality, it will probably be a combination of both of those. Now, with that, I will end my discussion on markets and move a little bit towards copper's role in energy transition. This slide reflects the various diverse end uses of copper and applications of various copper fabricated products category. Now, copper is one of the most prominently used metals in the construction sector as well as the electrical network sector, as you can see from the slide. In the construction sector, it is used as building wire in the form of plumbing, as well as commercial tube for HVACR equipment. It is also notably consumed in the electrical network sector, where you require power cables to connect renewable installations, for instance, and distribute power to end users. And given the metal's credibility as an excellent conductor of electricity, it is of immense value in an even more electrified world that will be underpinned by energy transition. Consequently, as electricity output increases, more copper will be required to fulfill to the needs of an electrified world. Electrification of transportation and low carbon energy generation sources will exacerbate copper demand. EVs and renewable energy technologies in themselves, such as wind and solar, in themselves use more copper than their conventional counterparts. But in addition to that, you will also need support infrastructure such as energy storage, electrical grid, and EV chargers to connect those dots that are also copper intensive. Energy transition is accelerating in pace, and with some of the mature markets such as Europe and the US setting in long-term and interim carbon targets and also supplementing those with state funding and sector-specific policies, copper is set to benefit. This would in turn, on the semi side, also spur new investments and increase semis production. And policies such as the Inflation Reduction Act in that context will ensure that some of that end use demand coming through from EVs and renewables is actually met locally or regionally at least. So here's just a quick summary of what is happening in reality. We're already seeing this energy transition underpin growth or underpin demand in the EV sector, for example, where annual demand from EVs, including hybrids and fuel cell vehicles, is expected to be more than 6 million ton in 2040. A large part of this demand will be actually in the form of copper foil that goes into the batteries, aside of the conventional wiring and motor windings. Accordingly, what we are seeing in the semis industry is a lot of a spurt in copper foil investments across various geographies, but particularly closer to the manufacturing value chains where those are evolving. So besides Asia, we are seeing such investments come through in Europe as well as North America, including Canada, which is set to provide support to total copper consumption in these regions. It's important to note that some of these foil plants, especially outside of China, actually use high-grade scrap in place of refined copper. So that supports our total copper consumption forecast more significantly than refined copper. Similarly, besides EVs, renewables are also set to support copper consumption. Base case annual end-use demand from wind, solar, and energy storage is forecasted to double by 2040 compared to 2020, from just a shy of about a million ton to around 1.9 million ton in that year. Within renewables, offshore wind is deemed to be the most copper-intensive technology given the extensive cabling requirements for those projects, while for solar, even though significant amount of copper is consumed, it's really the volumes growth in terms of installations of solar power projects that will underpin demand over the next decade or 2 decades. Now, what I mentioned about just now in terms of the EV, the numbers that I talked through about the EVs and renewables just now refer to our base case scenario. What happens if we were to transition if we were to transition to a scenario that's consistent with a 1.5 degrees Celsius global warming scenario or a net zero scenario? In that scenario, the uptake of these technologies will be much more aggressive. So you can see on the slide through these two charts, the gains to copper consumption in a net zero scenario versus our base case. And you can see from the chart on the left-hand side that in a 1.5 degree scenario, the maximum amount of gain to annual total copper consumption in the year 2040 relative to 2020 comes through from EVs and B, grid infrastructure. Annual demand from wind and solar is also expected to rise, but these two are the main contributors to long-term demand. Higher penetration of copper-intensive EVs is expected to support incremental net demand gains of 3 million ton under the AET 1.5 scenario in 2040 from vehicles. And grid upgrades will support a higher electricity output, which would imply grid upgrades to support that higher electricity output will imply a copper demand gain of nearly 4 million ton in AET 1.5 in 2040. So overall, end-use demand gains from power generation, vehicles, EV charges, as well as those grid upgrades will provide an estimated uplift in total copper consumption of close to 5 million tons in 2032 versus our base case scenario. So that's just some food for thought on how the market could look like in a net zero scenario. And that's something I wanted to walk through before I signed off. That's all from me today. Thanks for listening in. And thank you One-to-One Mining for having me here.